Energy finishing as the top S&P sector in March. It's the best performer in the first quarter overall after lagging last year. Is there more upside ahead in Q2? Well, let's bring in Arjun Murti, Veriten partner focused on energy macro and policy. He's also on the boards of ConocoPhillips and Liberty Energy. It's great to have you on the show, Arjun. And I'll start right there. The fact that we saw this rally in energy stocks, and then over the weekend, we had more geopolitical angst with President Trump making comments about Russia. How does this position us for Q2 with oil and gas?
In multiple tranches, so it's going to start with $10 billion.
Has caught most energy experts by surprise here. People were bearish coming into the year on oil prices and concerned about a correction, and lo and behold, we've hung in here into the 70s, and I think that plus recovery natural gas prices has really got this group going again here.
The impact of trade policy, foreign policy, some of these other macro dynamics, how do you see them factoring in?
I mean, it's part of the uncertainty that people had come into the year concerned about. And I think if you told people we were going to have concern about recession, throw in trade tariffs, and OPEC's going to announce production increase, people would have said, look out below. But in fact, some of this is catch up from years past, where we had been told over the last several years we were in an energy transition out of traditional oil and gas only into the new stuff. And I think people are coming to recognize we're going to need all forms of energy going forward. That plus the Mag 7 correction that was highlighted earlier has allowed people to put money back into the sector, especially in light of returns on capital, free cash flow, and the dividend policies being much better for this sector than we've seen in years past.
So, Arjun, you mentioned OPEC has already announced production increases. So does energy's outperformance, even in the face of that, leave the sector more exposed to any macro data that suggests global demand is flagging further, or are there other things that are bolstering energy right now?
You're hitting the nail on the head on one of the key points. People have been worried. China's slowing. What if we have recession in the U.S.? What if we throw tariffs on top of that? In fact, demand has sort of been grinding higher. Now, listen, if there's recession or some other economic correction to happen, energy usually struggles in that kind of environment. But at least so far, the demand numbers have been hanging in there. And probably as importantly, aside from OPEC, shale production is showing some signs of maybe the best days are behind it. And people are starting to wonder, maybe we're going to have to start looking for supply outside of the U.S. It's been the bulk of supply growth over the last decade.
So tell me if I'm oversimplifying here. If you're still bullish energy here, you think the consumer can continue to hold up despite the worries here, and that grind higher then continues?
We would be concerned that if you have recession and demand weakness, energy is not immune for that. No one ever should think it is. What I will say is the new element can be that the supply side is starting to look less bearish than it was in years past, where every time oil went up a little bit, we saw a flood of new shale supply. If those dynamics are changing, it at least provides some amount of stabilization for the sector going forward. But make no mistake, if you have recession, energy is going to struggle. If we avoid recession, that's where you can get your next big leg up in this sector.